Hello friends, welcome to our class on personal finance. Today's subject about execution of personal loan agreement. There are 10 golden rules which the borrower must follow before inking any personal loan agreement. We all need loan for building, loan for marriage, loan for medical treatment and many other reasons. Sometimes we go to the bank, financial institutions, even fintech companies to access the loan. But before going to take the loan, there are 10 golden principles which you must follow before signing any loan agreement. In today's class or deliberation, we'll deliberate those 10 important points. This is not to discuss against taking loan. This is just to make you aware that these are the 10 important issues you must check or keep it in your consideration before going to execute the loan agreement. But I will request you that please subscribe to our channel so that you get many such deliberations in the form of video to take care of your personal needs. Now let us come to the subject. Number 1, always calculate the effective rate of interest and always avoid flat rate of interest. I will tell you the difference between the two. There is a huge difference. In the flat rate of interest, you will find there is a very small rate of interest, but computation is little different. Flat rate of interest means that they will charge the interest on the total loan amount from day 1 to date of making full payment, in spite of the fact that you are paying the installment on a monthly basis and the loan amount is keep on reducing. That they don't consider. So they charge a flat rate to show a very attractive rate of interest. So first and foremost point is that to calculate what is the effective rate of interest based on reducing balance method. That means whatever amount you are paying, the principal amount should always keep on reducing so that your interest component is reduced. This is a first area of checking. Second, sometimes some of the lenders offer you 0 EMI for a period of 6 months. It is very attractive. But before going to execute the loan agreement, just check, okay, 6 months there will not be any payment of EMI, but is there any payment of any finance charges or processing charges? Suppose your interest rate is 10% on 50,000 rupees. For 10%, 50,000 rupees, for 6 months it comes to 2,500. But if they ask you to pay the processing charges of 3,000, it means you gain nothing. So that is another area to check. Do not go against advance payment of EMI. Sometimes the lender will say you pay one installment in advance before taking, say for example, your car. Mind that whenever you are paying any EMI in advance before taking delivery of the car, motorcycle or anything like that, it means that you are basically repaying a part of the debt at the very beginning. So therefore, your interest to be calculated on the balance amount and not on the full amount. So please understand, there are several marketing gimmicks in the finance market. You have to understand. So whenever they are asking you to pay one installment in advance, it means that you are repaying your debt at the very beginning to certain extent. And if they do not consider that while calculating the interest amount, that means you are losing. So therefore, while zero EMI scheme is not favorable to you if there is a corresponding processing charges. Secondly, do not opt for advance EMI scheme. Fourth point which you must check, that whether there is any hidden charges or not. That you have to find out, and that you can find out by going through the loan agreement. Next, most important is the foreclosure clause. Many times, suppose you are taking a bank loan for constructing your house and you are getting some amount of money, lump sum, on account of any selling of property or anything like that, and you want to repay your loan. Now you have to see whether your loan agreement has any clause towards foreclosure of the loan, and if that provision is there, what is the cost? Normally banks charge, if you want to foreclose your loan, that means if you want to pay the money in advance before the due date, that is called foreclosure clause. But if you have to pay in addition to the due amount a certain amount on account of charges because you are paying in advance, that has to be considered. First of all, that provision has to be there. In certain loan agreement, you may not find that provisions. That means, in spite of having money with you, you cannot repay the debt in advance. So that you have to ensure that there is a foreclosure provisions. And then again you have to check what is the cost for the foreclosure. Next, please review the terms of the agreement. Normally we find that the lenders, they give certain documents and ask you to sign on certain pages. I am telling you, this is the reality. And most of the borrowers do not go through the loan agreement and its conditions. This is very dangerous. You please sign, but sign with the knowledge. So, review the terms and conditions and the fine prints of the borrowing agreement. This is sixth. Seventh is that take loan based on your present and future earning capacity. That is very, very important. Now, if you ask me, what is the normally amount, what normally people take loan? Is there any criteria? Is there any outer limit? I will say there is no specific rule, but standard rule, or you can say standard way we normally follow is around 25 to 30 months net salary of a particular person per month. That is the outer limit. That means if your net salary is 50,000, you can go 25 to 30 times of 50,000. Provided you have sufficient period to work in the organizations. So, that is the 7th point. 8th point is that, very interesting, whenever you take any loan, you will find maybe the banks, financial institutions, they will always ask you to take the insurance policy in respect of the assets you are buying. Suppose if you are buying a flat, so you may be required to go for taking a household policy. Now, you will find most of the banks, financial institutions, they are all associated as a broker or agent of some insurance company, and they get commission. So all these banks, they will basically influence you to take the insurance policy. Insurance policy you have to take, but they will influence you to take the insurance policy through their agency. This is there when you go for buying any automobiles, housing loan, etc. Mostly they are all the agents. In one hand they are selling cars, in other hand they are also selling insurance policies. Now question is that if you have your own known general insurance company with whom you have your medical policies, health policies and other insurance policies, and you find that their loss making history is very good, in such case you should always opt your own insurance company to cover your risk assets. So that is the 8th point. And 9th very important point is that if you take any long-term loan, say for house building or flat, which will take 25-30 years to repay, in such case we will always suggest you to take a term policy, term insurance policy. What is this term insurance policy? You have to pay a small amount of premium, but the advantage is, in case there is any mishap with you, the insurance company will pay the balance loan amount directly to your lender. So your family members will not be disturbed. So that is why in case of long-term loan, many lenders, they prefer that you take a term insurance policy. So we also suggest that if you have to give a protections to your family members, please take a term insurance policy, pay certain amount of premium, and by this way your life is secured by the insurance company, so that in case there is any unfortunate incident, the insurance company will make the full payment of your due amount and your family members will not be disturbed. And last, always go through the known banks and institutions. I want to tell you, there are many fintech financial companies. Fintech has to be a finance companies. finance plus technology. We have a separate video on that. Please be careful while taking any loan from fintech companies. Fintech per se is not bad. There are many good fintech companies in our country, but fintech frauds are very common. They will give you lot of attractive terms, conditions, huge amount, and will ask you to pay processing charges. Once you pay the processing charges, you will not find them. You will not get their trace. So be very careful. But fintech per se is not bad. There are many good fintech companies who are in the business of finance and they are doing exceedingly well. So please go with a very reputed fintech companies, very reputed banks, very reputed financial companies or financial institutions, and you secure. So these are the 10 important checklist or 10 important points you have to follow